Welcome to the Flowing Forward podcast, the economics of water in a changing world, a platform dedicated to exploring the pivotal role of water in shaping our global future. Today, we are privileged to host an extraordinary assembly of thought leaders from the Global Commission on the Economics of Water. Join us as Tharman Shanmugaratnam, President of the Republic of Singapore, Arunabha Ghosh, CEO of the Council on Energy, Environment and Water, India, Naoko Ishii, Executive Vice President and Director at the Center for Global Commons, University of Tokyo, and Ismail Serageldin, Founding Director of the Bibliotheca Alexandrina in Egypt, illuminate the urgent changes and transformative solutions in water sustainability.
Water is not just one sector. It's not just about the water ministry that has to solve for this risk, right? Water is a defining factor of production. It's a defining kind of natural constraint within which our economies and our societies have to operate.
We need to mediate in a way to bring the financiers along with the technical specialists on the innovations and the local communities and bring them together.
This is we call it the Just Water Partnership to really capture those key principles. One way to really see that the high end is how to flip the current economic system. That's why I'm very keen to push this agenda.
This episode promises to be a crucial dialogue, offering profound insights into the systemic shifts required for a sustainable water future.
We know what is possible in water, the innovations, the governance shifts, but finance is critical. And the key question we are asking ourselves is how are we going to step up finance? How are we going to get much larger volumes of investment flowing into water, especially in the developing world?
Well, I imagine that we cannot increase just official development assistance because it's far too little for both climate change and water and other issues. And therefore, we have to tap into the private sector. And that means that we have to reduce the risk that the private sectors perceive to be in the poorest developed countries in the nature of the projects that we talk about. We can use our limited public funds to reduce the risk and then allow the private sector to participate, and even we can remove the individual project and move it to wholesale from retail. Right. I think it can be done. And the private sector has $480 trillion. And
no lack of money.
No lack of money.
But I think it's the monetary and non-monetary ways of reducing risk. Right? For instance, just getting information out there that actually often the perceived risks are much higher than the real risks. Getting the information out there, what is the most efficient way of using your water so you get better returns on your investment, etc. This is just a public good we can provide as information. And the reform of institutions as well, making sure regulators are better capacitated to manage this system and govern the system. And then you can have the monetary approach to risk, which is using limited public capital to leverage by de-risking the sector as a whole rather than individual projects. Then you crowd in a lot more investment.
That is also a small point.
Exactly.
Naoko?
Right. Actually, there's still our financial system and the economic system that regard the water or natural capital as from only risk point of view. The challenge is that how we can really reform the economic and financial system to see the natural capital from opportunity point of view. It's a lot of the work needed, but something ongoing already for the last year or so is very, very promising. So that how to change the accounting and how to make the disclosure and how to put the monetary value on this natural capital so that we can bring the nature or the water, not as a risk point of view, but an investable asset that will change the flow of the finance to this area. And a lot of work like TNFD task force of the nature related and the finance disclosure, and is already doing a lot of great work. But again, that we need a pathway from risk towards an investable asset. That's why we need to line up accounting professional, rating professional, standard setter professional, MRB professional, together with the tech companies who can provide the good data. So that's a lot of work we need to do, but it's already happening because nature positive is a kind of goal to, global goal to do.
That's a good point.
we also have several other problems that will keep us or will delay our ability to scale up on the global scene what we hope to see. And partly that is because many of the neediest countries do not have the capabilities to develop the projects that investors can come and invest in. And they are not intriguing enough and interesting enough for the investors to come and go and try to identify projects and work with them. I'm thinking of the poorest countries in the Sahel, for example, and places like that. Very, very poor people who are at risk and who need the innovations that we know exist out there. And we need to mediate in a way to bring the financiers along with the technical specialists on the innovations and the local communities and bring them together. And that's an important task of mediation that we have to do in the future.
This is we call it the Just Water Partnership to really capture those key principles in our proposal. But in addition to those, the project-based approach, the one way to really see that the high end is how to flip the current economic system. That's why I'm very keen to push this agenda, maybe high end agenda, how to put the monetary value of that natural capital, including water, so that we don't have to struggle with every project, how to structure the project, but can we really change the accounting system? Can we really change the valuing system? Can we really change the way we see the water or natural capital? That is maybe in addition to what we have been talking about, more like a project in terms of governance point of view, but could we really see that the pricing the natural capital as a way to go so that we can reset our economic relationship with nature, in harmony with nature, because we were completely out of balance, that the green water balance. So that's a high-end goal, but I think we have to do project by project, water partnership, just water partnership, but also some high-end goal that together.
Yes, yes.
I think one more thing we can think about is water is not just one sector. It's not just about the water ministry that has to solve for this risk, right? Water is a defining factor of production. It's a defining kind of natural constraint within which our economies and our societies have to operate. So then it's not the individual risk of a project or the individual responsibility of a water ministry. Like insurance, you're spreading that so-called risk, but also the opportunity of that asset across the economy. I think then there are many more economic actors that see value in water and value in investing in water.
And in innovating so that we are able to conserve water, use it far more efficiently for the same economic output.
Exactly.
Indeed, including reuse of water, especially in urban and industrial areas, where we have not really done enough on reusing water, recycling water, and much more in agriculture, in water use efficiency, with which you can get, instead of simply looking at yield as a ton per hectare, you should start looking at yield as ton per cubic meter of water.
More crop per drop.
You will see, more crop per drop, as David Seckler used to say. So I think that we have a lot of activities that can be repackaged in a way that highlight that it is a viable investment, and at the same time that it is responding to a real felt need.
I think Singapore has done so much in terms of creating the circular economy of water as a viable sort of economic activity. It's not just more crop per drop, but each drop getting used multiple times over.
Right.
How do we get that going?
Well, first we price water. So everyone, a business, a household, everyone knows the price of water. If you're poor, you get some subsidy to ensure that you can pay your utility bills, but everyone pays for water. And we price water not just based on today's costs. We also price water based on what we know the long run cost will be, because water is going to become more scarce. But the other thing we do is we make the most of technology. And it's remarkable how it's evolving. Reverse osmosis technology, for instance, the latest membrane technologies are far more efficient. Every drop of water we use eventually leads to another drop of water.
Correct.
And that's the way we create this circular economy in water.
One issue that is now increasingly coming up, it came up during the climate negotiations, come up in other forums. So what is an appropriate return on investment? It's one thing to keep de-risking, but I think we also have to rethink, what are we looking for supernormal returns? Are we looking for something else? Especially when you factor in the value of nature within which water is embedded. I think that's a larger conversation to be had between society, state, and the private sector, right? And we need to come to some kind of consensus on that. It's a dialogue we need to have.
But investors invariably look at the financial rate of return as opposed to countries that look at the economic rate of return, which includes the shadow pricing of valuable ecological services and so on. So I think that there is a moment there where we have to figure a way of involving, all the members from the local community, the international financiers, but ultimately your key question on what is the viable rate of return will be measured against the alternative rate of return that will be available to putting your
capital
somewhere else. And that, I think, is when we tell them it's an investable asset, so it becomes eligible. But what the actual shifting is going to occur in terms of putting your money there, that will be related to what you said. And secondly, in that sense, for the poor countries, it's a long-term perspective. For the investors, it's a much shorter perspective. And that's another mediation that has to be done.
That's why I think we were talking about how to change the accounting principle so that we can incorporate those kind of barriers, overcome those kind of barriers. And if we just continue to stay within the same accounting principles, same standard setting, same rate of return exercise, we will never really finance the water as a natural capital or investable an asset. So the challenge that we really have to challenge ourselves that how we can really shift this economics, that the key economics of the system.
Well, on the financial returns, a key issue for investors, particularly when it comes to new innovations, is they're not sure if there'll be demand. So the role of the public sector is also to spur demand for new innovations, innovations that are going to lower costs, provide better value, better, cleaner water, and so on. And the role of the public sector has also to provide predictable regulation. So it's that uncertainty over demand and uncertainty as to whether regulations will keep changing that raises the required rate of return. And we can reduce that required rate of return through public sector governing water better.
Absolutely. I think for me, the last thing is when we say the shareholders and stakeholders. Do we have the right platforms where the shareholders and the stakeholders can have a genuine dialogue? Because I think that's where the role of politics becomes the one to mediate between these two different tensions. But I think when that is not mediated well, the consequences that it is reflected in a sharp spike in the price. So again, the learning from different parts of the world where those conversations have been held in a civil way and sort of common ground has been found might be one way to proceed.
Great. Thank you very much.
Thank you.
Thank you for tuning into this episode of the Flowing Forward podcast as we navigated the economics of water with our esteemed guests. We are excited to announce that the Global Commission on the Economics of Water will unveil its final report on October 17. This pivotal document, crafted with rigor and foresight, will present groundbreaking insights and pragmatic strategies to propel global water sustainability forward. We implore you to remain engaged with our podcast for more enlightening discussions and inspiring narratives of collaboration. Together, we must drive meaningful change and secure a sustainable future for water resources worldwide. Until our next episode, let us steadfastly flow forward toward a transformative global impact.